one of the setups that I look at in the morning, and it's probably one of the more aggressive aggro setups that I look at, are looking at the first 5 minutes after the bell and after the first 15. In other words, 9:30 to 9:35 and then 9:40 to 9:45. Now, why those two 5-minute chunks? If between 9:30 and 9:35 Eastern, I get 5 of my propulsion dots, a free indicator, where I can see the cross of the 8 exponential moving average through the 21. I mean, if you have an 8 and 21 moving average, you want to see it cross pretty much on the open and stay crossed where the 8's above the 21 going into 9:35. If that's the case, okay, you can look for a quicker 5-minute, what I call breach retreat. Let it break higher through the 5-minute high after the bell and then pull back to about a 38.2 to 50% retracement. Just a quick Fibonacci retracement, okay? The next block is 9:40 to 9:45. So again, if I get my green propulsion dots, which is going to show me the 8 exponential moving average crossing up through the 21, I use the prop dots because they're kind of a self-correcting smart exponential moving average, and they take into account a few things. They take into account interaction with price. They take into account interaction with the two moving averages. So it really simplifies, rather than having all these moving averages all over my chart, I just get dots. They're either on or they're off. And again, this is a free tool. So if I get 5 in a row, then I know that the 8 has crossed the 21 and all those magical things that I want to happen to confirm that a breach retreat after 9:45 a.m. Eastern is valid. So you'll notice 9:40 to 9:45, we had the dots. So we need a breach. All right, we just don't buy the retreat, we need a breach. Well, when did that occur? Happened over here. And you can see we use a tool that just automates the fact that it took out the high. That's all. So this isn't anything fancy. It's just, hey, you took out the high of the 9:30 to 9:45 15-minute chunk of the day, and I'm going to let you know that that's happened. Terrific. We didn't get a retreat, gang. We just didn't get a retreat, so nothing happened there, which is fine with me on a Monday. For Mondays and Fridays, I just assume be a little bit more conservative. So let's move out to the 30-minute breach retreat, 9:30 to 10 o'clock. You do not need dots now. You do not need dots. So what happened here? So we have the high and the low. We have the high and the low between 9:30 and 10 o'clock Eastern. 9:30 and 10 o'clock. High, low. A breach is taking out the high right there. Boom, there's your breach. So now what are we waiting for? We're waiting for a retreat. Okay? Now, conservatively or moderate, which is a moderate risk, not moderate probability. I'm always looking for high probability, but you can have a high probability, high risk trade. Think about that for a moment. Just because the probability is high does not mean budget-wise or affordability, it works for every trader the same. So I need to see the market come back to preferably the zone that represents a 382 to 50% to 618% retracement. Never got it. So for me on a Monday with aggressive pullbacks, all I'm going to end up with, and by the way, this was to basically a retest of the breach level, and this was to the volume weighted average price. All I did today, gang, is I bought some options. That's all I'm really allowed to do. Let me take you back to my notes. All right, so where is that? Here we go. Mondays and Fridays, for me, are for end-of-day scans. A lot of those discussions we had in the premium videos about the pullbacks that we wanted to buy, that's this morning. Not a lot of active day trading. However, what am I going to do? Smaller size. Emphasis on retreats and options at aggro levels. And that's exactly what I had. So all I have today, although they're working fine, but all I have today are SPY, NQ. I just have calls. And the neat thing about having calls on a day like today, where I'm still looking at some of those longer term daily opportunities is I'm sort of free to not stare at the calls. They're going to move a little bit more slowly. They're not representing as much risk. I know if, all heck breaks loose, the most I have at risk is whatever I paid for those calls, because we paid less for the calls. And when I say less, I'm always going to get a better deal, a blue light special on a call when I buy it as the market's pulling back. We're not buying it here. We're buying it here. Very different bid-ask behavior. Very different level at which where the trades are going off in terms of being able to get filled at the bid or having to chase the offer, the ask, when you're trying to fill these positions. So I hope this sort of gives you an idea of what I did today. And it goes in line with everything we talk about every day. I mean, it's insanely repetitive. And I sure hope it is, because if it's repetitive, that means it's process driven. If it's process driven, you can follow it. So this is the same thing we talked about Wednesday, same thing we did Thursday, same thing we talked about Friday, same thing I'm going to do Monday. All right. So that's the process. Bullish bias, breach retreat, and then position ourselves with either calls in the underlying futures or ETFs. By the way, ETFs are fine if you're a futures trader. Just an alternative, but you're still going to set your trade up on the pricing that you're seeing in the futures contract. So, for example, I'm not pulling up the QQQ to set this trade up. The only time the QQQ is relevant to me is when I'm going to fill my order at the money for next Friday's expiration, getting long a call on a pullback in the NQ. So the QQQ is only as relevant as the moment that I want to pull the trade off. I go to the options chain and I say to myself, okay, I'm somewhere near 233. What is an at the money position for next Friday's expiration? So we're talking about June 26. And so then I can go right to the 233 call. These things are one wide. Okay, in a couple instances, you even have a 50-cent level. Okay, so I go to 233 and I scoop up those calls. And that's how we do it.